All right, folks, welcome back. This is our Monday commentary for the ICT Mentorship. All right, so we're looking at the dollar indexes, our daily chart. And it looks like, as luck would have it, the dollar is going higher. So with the dollar going higher, we just fell short of the 102 level. That was our next objective. If we get some explosion to the upside, some kind of capitulation type move, I'm looking for it to slide into that 103 level. This is the actual old high, so that's the actual printed high, but we're obviously reaching for the rounded 103 level. We'll see if we can get through that or not. I mean, I'm only looking for that right now. We'll see how we trade at that level, if we do at all. It could be done, never even hit 102. I think it will, but you always have to be aware that these things may not get to your objectives, but it's nice to see it when it's panning out. All right, hourly chart on the dollar index. You can see we had a nice market maker buy model. I mentioned the breaker, came back down in old area of distribution comes accumulation. We break through the relative equal highs. This is an instance where the classic support resistance theory, old high broken becomes resistance turns support. It starts to rally. Buy side imbalance, sell side inefficiency, comes back down in consequent encroachment. 2 times into that, reclaimed. See that? Now, this level here, half of that buy side imbalance, sell side inefficiency, or consequent encroachment as I teach it to you, that is no longer a valid level. Not by my definition, because we've already went to it once, and a second time it's been reclaimed, and then we had a run above relative equal highs. So it looks like they want to just run it up into that 102 level. How we trade at 102, if it goes up above it and then crashes down below here, that might give us an intermediate term high. That means we'll have to watch and see, does it want to correct or a more meaningful manner. In other words, I'm not still trying to call a top. In other words, I'm not trying to do that. What I'm suggesting is if we run above 102 and it breaks down and it goes below the lows in here, that to me warrants at least an observation on whether or not it wants to break down. And we'll be studying and looking for it. Obviously, it hasn't happened yet, but we have to be mindful of the things I'm trying to teach you to look for and anticipate. So it might run above 102, come back down, and not run out below this imbalance in here and these lows. Specifically, not just taking out the lows, but it's got to go below the remaining portion of the buy side imbalance, sell side inefficiency. We go below that, say it acts as resistance, comes up and hits it like that, that might be a more meaningful retracement. And that would be problematic, in my opinion, problematic on the near term for the bullishness on the dollar. I just don't see that yet, but I'm giving you something to anticipate should it manifest itself this week. I'm still bullish on dollar. All right, and the 15-minute time frame on dollar, you can see we had a nice run here, buy side imbalance, sell side inefficiency, consequent encroachment hits it there once more here, and then relative equal highs. You know the drill on that. We're bullish, liquidity here. People are trying to capture this as what? Resistance, trying to capture a top in the marketplace. It rallies up and now it's consolidating around in this area. So I want to see it just start to grind higher and reach for that 102 level. All right, euro dollar daily chart. Well, looks like we got a little bit more continuation on the downside, so it was nice to see that delivered. We're looking for that 1.0636 level, basically 1.0635, let's call it that. I think we'll reach for that. Now we do have a little bit of an extension in here. I don't want to see it come back up and touch these relative equal lows. I don't want to see that. I want to see it leave some of that open. Now it can come up a little bit, but I don't want it to be overzealous about it. Like I don't want to be too much of a retracement, but it's likely. We can see it come up a little bit and then roll over. I'd prefer it just collapse and create another large range candle on the daily chart. That's what I'd prefer. If we get the higher run on dollar above 102, it stretches its wings to maybe 102 and a quarter, 102 and a half, something to that effect. That would spell obviously a deeper run below 1.0635 on euro. Not trying to pick a bottom on euro, still bearish. All right, here's the hourly chart on Fiverr or EURUSD. Nice displacement here, came back up in, consequent encroachment, and sold off, attacking the sell side liquidity here. I like the idea of the bearish order block here. I like that, maybe touching that, then sending it lower. Opening price to the low, I like that range in there. So I'm not sure what that actual price is. You'll have to look at that on your own. I apologize for not having that handy. But just basically, it could spike up a little bit, that being like a Judas swing. I would like to see that break lower time frames, give a intraday shift in market structure, find a fair value gap or a bearish breaker on a lower time frame, and use that as a catalyst to practice a run maybe into this level down here. That's how I would anticipate going into London tonight, maybe into New York, something to that effect. All right, Euro-dollar 15-minute time frame. Again, as I mentioned, just consolidating here, allowing buy side to build up in here, and your sell side resting below here. Now, when we have conditions like this, remember the bias is bearish. So we have two clean levels here and here. Preferably, we want this to occur. We want to see it go up, run the buy side first, because why? It's bearish. It's going to run the stops, trail down from here and here on any shorts. We want to see them run that first. This is narrative, okay? This is really important you write down your notes, because if not, you've completely missed the whole instructions that's in this lesson today. For entries, okay, for this entry strategy that I'm teaching you, I mentioned I would give you something obviously to work with for entries. I'm using the narrative of the buy side liquidity being taken first, then attacking the sell side. It's preferred this way because we don't want to see it drop down, take the sell side liquidity, and then run up for the buy side. To do that really opens the door for a deeper retracement up into here. And we don't want to see that. So an ideal scenario would be, while we're bearish, it's consolidating, it runs up, takes the buy side first, then it's going to be real easy to trust that it's going to roll for the sell side because we have the bias behind us. It does not mean that it's flawless. It's going to be perfect. There's no way this could fail. I'm stating that the narrative that I would submit myself to is expecting the buy side run first, then attack the sell side and expand lower, reaching into those objectives we mentioned on the daily chart. All right, pound dollar. This is our daily chart here. Another down day. Just almost made it down to our objective here, which is the next daily swing low, and go back and look at the previous commentaries. And you should have it in your notes anyway, but for those that don't, and you're wondering what this level is, I've obviously talked about it. It's in there. I just want to have the chart like this so I can go right into the commentaries and get through it rather expediently. So we're looking for maybe a small little retracement up, but not much, and then a run into this objective and below. So we're looking for 1.2675 to be breached, and maybe could expand down to 1.2650. All right, hourly chart. Okay, Sunday's trading here. Small little imbalance, comes back up. Institutional order flow entry drill. I'm not trying to sell the idea on Sunday's trading, but then here we have it. Really nice run in London. Breaks down institutional order flow entry drill here as well, and breaks lower for the sell side here. And just a little bit too choppy for my liking, but you know, it's overall bearish, and I'm looking for a continuation to run out that low. 15-minute time frame, as I mentioned just a moment ago, here is the breakdown. Here's 2 o'clock in the morning on this candle here. Runs, breaks aggressively lower, small little fair value gap SIBI in here, trades up into consequent encroachment in that vicinity, and then breaks, attacking the sell side, creating the early New York session low, retraces back up into a bearish order block. I don't like this one so much, and I looked at this and I was not comfortable with seeing this. I wasn't certain that it was likely to retrace away from that one. So this is one, if you see it here, I don't like this one personally, and I would not have traded it. So this move, while it was pretty decent, it's not a lot of movement, but it was about 50 pips or so. That would have been a nice run into that sell side, but I would not have participated in that one, admittedly. All right, finally we get into E-mini S&P futures contract for June delivery 2022. All right, so we had a deeper rundown into the last bearish candle here in this relative equal lows. This is the beefy bodied candle, the opening price here, extended out in time. You see we dipped into that, had a little bit of a retracement back in, all of this delivery. I don't want to see it go beyond, personally, I don't want to see it go back above the premium high of this buy side balance, sell side efficiency. So this candle's low, extend that out in time. Do that on your own chart. I'm not doing it on mine because I want you to be studying it. But this level here, extend that out in time. I want to see it kind of like hold price down. It can spike through it on an intraday, but it needs to go through it and come back real quick, not spend time above it. What does that mean? It's relative to the time frame that it works off of prior to running a level. And I know that sounds confusing, okay, but this is where the experience factor kicks in. It's okay. Let me give you a scenario that I think would be permissible. If we're looking at a 5-minute chart or less, and it runs above this short-term low here, and then within the same time frame on, like, say 5 minutes transpires, and it gets right back below that with a heaviness to it, nice movement, and it drops, say 15 handles, 10 handles, something to that effect, I would trust that that's likely all that was required for it to do that. And then I would look to see if it continues to break down, then look for bearish fair value gaps, institutional order flow entry drills in the premium. That way you can look for, in my mind, something bearish to practice looking for a continuation lower. It may not do that. It may require 2 days of retracement or consolidation, okay? Because this right here looks like they're trying to give the idea that this thing is 1, 2, 3 bottom, okay, and looking for higher prices. I'm not subscribing to that view, so I'm looking for just a little bit of continuation on the upside and then roll over, and then the following day, more continuation on the downside. That's what I would expect. That's what I'm anticipating myself looking at it. But, you know, we obviously have to wait each day and each trading session on its own delivery. Okay, so what we expect, what we're looking for may not always pan out in price. So we either have to adapt or fall on our own sword. All right, so here's that order block on the daily chart. It dug into that. Notice what it was doing. It was consolidating here from Sunday's opening, Monday's early trading, really sloppy in here, consolidated, runs the relative equal highs in here, back into this little gap. If you zoom in on your own charts, this will look a whole lot more meaningful to you. I'm showing it to you like this, that way you can go and have an interactive study with your own charts and annotate them for your study journal. But that small little gap in here, it runs that and above the relative equal highs here for buy side. So what is it doing? It's doing what I outlined earlier, teaching that with the euro, we want to see the buy side taken first, then the sell side. Well, that's what's occurred here. We had buy side and sell side, and it was consolidating. So what do we want to see first? We want to see it run up, take buy side. That's narrative because we're bearish on indices. And then it went for the sell side. Went down into a discount array, that daily bullish order block. The bodies of the candles kind of respecting that as well. Then it starts to retrace a little bit. We have buy side here, and then we'll go into the lower time frame. I'll tell you what I'm looking for. Here's the 15-minute time frame. We dig into that bullish order block, and the market starts to take out the short-term high here. So in here, it's rather sloppy. Small little retracement in here, and then they send it higher, creating what? Buy side imbalance, sell side inefficiency, and then we have the breaker. So we have low, high, lower low, up close candle, right in here. There's your bullish breaker with a buy side imbalance, sell side inefficiency. Really nice in there. Trading down to a 50 level, so 42.50. Expands to the upside. What is it reaching for? What's it trying to fill? Pause the video for a second. All right, if you haven't paused it, you're going to miss the opportunity here. But this is the level it reached into and rebalanced. And we have that here, the SIBI, back up into a bearish order block. The bodies of the candles here beautifully representing that rebalance in here. And ultimately, I think we'll look to see it trade up into this area here, revisit this old SIBI. Okay, we only had consequent encroachment here, so we could trade back up into consequent encroachment, maybe bump just above that high, or completely close in. Either way, I like the discount low and consequent encouragement. I'm not going to co-sign the premium high of that range. I think that's enough. And look where it is. It's around that 43.20 level. Remember what I was mentioning? That old daily low to draw out on your own chart. So there's a lot of things pointing in this area where it might want to go back up into. And I don't want to see it go much above it. So go back into that example and kind of like the idea I was saying, I don't want to see it go up and spend a lot of time rebalancing that old low on the daily chart. You're going to have to revisit this portion of the video, rewind it, okay? In other words, listen to E-mini S&P commentary a couple times tonight. Because if I keep going back and forth in the charts, I'm going to confuse myself. But what I'm saying here, I'm completely comfortable and trusting that what I said is accurate. But that 43.20 level, we only want to see it trade up and maybe spike up above that old short-term low, which is the premium high of the old buy-side imbalance, sell-side efficiency on the daily chart of E-mini S&P. So we want to see it just spike up here, spend just a very short, brief amount of time, and then come back down in, and then maybe see if it has some kind of willingness to create a bearish signature that look for lower prices. It might not do that, but from where we are right now, that's what I'm looking for. So it's about a 20 handle range. It could go up to 43.25, something to that effect. I don't want to see it go above consequent encouragement and reach here. That's what I don't want. Because if it does that, then what we'll do is, if it goes above it, we'll be looking for this to act as some kind of a support level. And if it does, then we might have a deeper retracement going higher on the daily chart. And that sets up something entirely different that is outside of, rather, the scope. And that would set up, obviously, something that would be outside the scope of what I'm suggesting here, because I'm holding on and maintaining the bearishness now, unless I'm proven incorrect. And incorrect would be running above the imbalance here and finding support and rallying. In my mind, would suggest that I'm wrong with the continuation on the downside, at least for the near term. So I'd have to look at some kind of a retracement idea that works with the daily chart, looking for a higher premium array. But that's what I got for today. So obviously, I'll touch base with you all by way of YouTube tomorrow with the free teachings and such over there. It'll probably be a really short one tomorrow. And I think that'll be it for today. Until I talk to you then, be safe.